Hello everyone and welcome back for another of our Trader Talks videos with myself, Richard Perry, market analyst at Handtech, and also Steve Miley, the market chartist. Now, as ever, if you're not trading with Handtech, you can go to our website hmarkets.com, where you can sign up for a demo account very quickly, or even sign up for a live trading account in 4 easy steps. Now, as we move into this week, Jerome Powell, this big speech that he's got at the Jackson Hole Economic Symposium, Fed Chair Powell, is going to be key, I think, Steve, isn't it?
Yeah, I think it's going to be, a lot of markets sitting here at turning points, particularly in the Forex space, which we're going to kind of concentrate on today. But equity markets, obviously, we've been focusing on those the last few weeks as well, continuing to push higher. That risk on theme is very clear, but less clear with the dollar now, less clear in the FX markets. And I think, Powell could give us a lead in either direction as he speaks tomorrow on Thursday.
Yeah, I think that Powell is going to be sort of dovish. Essentially, they're thinking that he could start to sort of lean the Fed towards some sort of average inflation targeting measure. So how he adopts that and how formal he adopts that, I think, is going to be key. But the trades that we've got today, euro dollar and dollar CAD, are both aligned to this trade, I think.
Yeah. So generally speaking, we're still looking at that dollar weakness to come through again, really. Dollar index still looks vulnerable in here. We've been in a consolidation phase again. But every time we've broken out these consolidation phases to the downside in here so far this year, we've seen very impulsive moves. So we're looking for that to come back through. And I'm looking at the euro in here. And a couple of weeks ago, we looked at the euro and we did warn of a potential double top pattern going in on a break of 116.95. But it's held that 116.95 level really well, more recently rebounding from 117.53. We're holding significantly above the trend line that comes up from May, and noticeably in here, the RSI has dipped lower in here. It's flirting around 50, but it's never gone below 45, which we have marked here on the chart. And for me, all it leaves is the threat to the upside. Yes, we're in consolidation, but the underlying bull theme, the bigger bull theme, is still there. And within this consolidation phase, I'm seeing kind of more of a rejection of the downside and more of a threat to the upside. 119.65 the high, above there then psychological 120, and then above there we've got kind of nothing really. We've got into 2018 levels up to 121.5, 122, even up towards 124. How do you see it, Rich?
Yeah, I think if you look at dollar index, for example, the 94 figure level held quite nicely, and that would have been the point at which you'd seen a dollar rally setting in. That would have dragged euro dollar lower, but we didn't see that. We saw the breakdown ultimately, and I think that breakdown is still alive with that big downtrend line on dollar index. Now for euro dollar, the thing that leaves me a little bit worried is how far the euro has come in quite a short space of time, and the fact that I think above 120 you're likely to see the ECB looking at that level and thinking, well, that's jawbone territory level. They might start to think about trying to talk it down, and that could lead to a little bit of a sort of a struggle for the euro dollar above 120. But I still see euro dollar pulling higher at the moment, and I think this weakness in euro dollar is going to be bought into. Now, as I said, how Powell impacts on that market at the moment is going to be important. I think we could see some near-term volatility, but I think once the market settles down, euro is still, I think, a buy into that weakness.
Yeah, and kind of takes us, with the dollar weakness theme, looking at dollar CAD, which is probably a better defined trade, which you're looking at this week.
Yeah, I really like this one, actually. You can see a very strong trend line, actually, through the past 5 months, actually, and it continues to run lower highs, lower lows. It broke down through a key level, 133 big figure area, has long been a big pivot line on dollar CAD, and breaking down below that last month was a really strong signal. I think that we're going to see some further downside, and that low at 129.50 really does sort of come into view. Now, I think rallies are a chance to sell on dollar CAD. You've got the oil price, which continues to pull higher, slow but sure, but it is moving higher. And I think that is going to help the Canadian dollar pull further higher. I think obviously once more this is very much Powell dependent in the near term with that Fed chair speech, but I think ultimately we're still looking to sell into strength. 132.50 to 133 figure area is a pretty decent sell zone, I think. I think you'd need to see a sharp move through 133 figure to really change this story on a near-term basis.
Yeah, I think you're right. I mean, the oil price is obviously helping. It's kind of a grind higher, but the last 24, 36 hours has certainly seen some strength. Hurricane Laura in here, obviously the shutdown that we're seeing in the Gulf of Mexico, supply restriction, plus that US-China phone call that we had in the week, kind of a bit unexpected. That's so on the demand side, you've got potential global demand for oil with, the easing of trade talk or trade war fears, with the trade talks still kind of ongoing. And on the supply side, you've got the restrictions from Hurricane Laura. So all of that points to oil higher, which should benefit the Canadian dollar. And I think I'm with you on that one. Dollar CAD lower. It's probably the most defined dollar weakness trade we've got out there.
Yeah, I know that you see this as a little bit of a boring one, but I think it's one of the ones that's slow but sure at the moment. And I quite like the fact that Canada is relatively settled and a little bit insulated from the China trade. And as regards to the risk appetite plays that you have, the commodity currencies, I think it's pretty well set actually compared to maybe the Aussie and the Kiwi with terms to China volatility. So I think that is something to also consider.
And the BOC, how do you see that fitting in with that?
Yeah, I see the Bank of Canada relatively settled again. It's not really jawboning anywhere. No. So I think that's going to be positive for the Canadian dollar relative.
Yeah, I'd agree. They're kind of sidelined. They're not in any way kind of stepping in at the moment, trying to get the Canadian dollar lower. So, okay, sounds good.
Yeah, thank you, Steve. And thanks a lot very much to speak to you again, Steve. And we'll speak to you soon for more Trader Talks videos.